Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's April 10th. A few items on the docket today. We got the NFIB Small Business Index. This is kind of the confidence level for small businesses for the month of March. So we had a 107.6 back in February, and it dropped a little bit down to 104.7. Again, even though it shows a drop, it's still in good range here, so nothing to be concerned right there. On the next two here are basically the wholesale inflationary numbers, so inflation in the wholesale division. Now, we take kind of a moderate look at these primarily because even though the cost of goods go up or costs go up sometimes on the inflation number, but it doesn't always get passed on. So they may sometimes take a lower margin due to competition to keep the consumers happy. So consumers don't always see it. So that's why there's not as much weight on this as we do see on the CPI and the PCE number. And the CPIO number will be coming out tomorrow, so FYI. So the producer price index, this is more like what they call the headline number here, with a 0.2% growth in February, and zero point 0.1 was supposed to be the forecast for the month of March, and it exceeded that to 0.3%. Now, when you super out what they call the food and energy, which are variables they can't control and can really offset things, they come up with what they call the core. So this is a core PPI here, and we had a 0.2%. Forecast is supposed to be 0.2%, and it went up, exceeded that to 0.3%. So both of them rose by 0.3%. So in this scenario, we can see that food and energy did not play a role in the increase of those costs on the wholesale side. So again, this could lead to more inflation down the road. We could hear this talk again further down as we did January, February. When the concerns came out with the wage inflations or possible wage inflation, and we saw that again. I think it was last week when we saw the job numbers. So again, those are something to kind of keep your eyes open for. We got right now a little distraction going on with possible trade war with China, but as soon as that is over with, their attention could go back to possible inflation numbers, and maybe again the Fed could increase their rate hikes as well. So just prepared for that in the future here, once this is kind of over. Now let's touch on the year over year here. So the producer price index here, year over year, went from 2.8% to 3% now. So their cost year over year is now up to 3%. Now the core PPI went from 2.5% to 2.7%. So again, this is getting pretty high here. Now on the consumer level, the Fed likes to keep it at 2%. So you can see that it's going up quite a bit on the wholesale side. At some point, you're probably going to see that moved over to the consumer side of things. Currently, the stock market's up. It's taking its Q quite up, is up quite a bit. Um, Bladder is due to, it wasn't a tweet, excuse me. I guess there's some comments. I left that tweets in there, but comments by the Chinese President Xi. Basically, the comments were enough that they basically feel that it was de-escalating the possible trade war talk, the rhetoric that's going out there in terms of that they thought it was going to be heating up. Like one person's coming up with $60 billion or $50 billion of tariffs. The other one's going to come back and retaliate to that with their own tariffs. Then 150. The back and forth jabbing a little bit. And right now, with President Trump's comments yesterday to President Xi's today. It appears that it's de-escalating a bit, and I think investors are feeling a little bit more comfortable where things are moving. That it's not going to get into a heated war here between the two largest countries in the world in terms of economy. So obviously that's a good sign here. Let's take a look here at the bond market. Bond market, as you can see, did try going above the 50-day moving average, has been pushed back, even though we did close above it the last 2 days. Uh, Again, this range here is narrowing here, so we got to be cautious that at some point it's going to be pushed one way or the other. 50-day moving average is looking to be a pretty tough ceiling of resistance here. It's keeping it down. We're down currently about 9 basis points, so not quite yet. Where lenders are going to price for the worst, but pretty close to where we left off yesterday. All right, so let's take a look here at the yields. Yields. Shoot, sorry about that. But they're also trying to fight the 50-day moving average. I'm sorry about that. I misplaced the slide on there, but it was going up. It was going up. It's up to about 2.8 right now, and it's still below the 50-day moving average in its yield curve. So the 50-day moving average and and the 25-day moving edge are getting to a point where they're going to be crossing, and it could push one way or the other in terms of yields as well. So that pretty much wraps everything up today. Tomorrow, again, we got the FOMC minutes and the CPI coming out. And then Thursday, even though we got data coming out, we do get the first glimpse of the Q1 corporate earnings report. So stay tuned. That could also play a role into, even though data could be good or bad, if those corporate earnings, they could be looking at those as well. They could supersede, the economic data. But in any case, I hope you guys enjoy the rest of your day. If you guys want more information, just stop over at Twitter. You'll find me posting or tweeting on Twitter at Mike Bjork. Otherwise, enjoy the rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.